What is the rumbling around the Wall Street world about the Marketplace Unfairness Act?
Well, the news that I'm reading today and seeing today is that it seems to be, while it might be sailing through the Senate, it seems to be running into sticking points in the House, and which I think is a good thing. I mean, I think this is a misguided bill to begin with. I think the prospects of what it does to small business is really not a good thing, and I don't know how much it's really going to raise in revenue, but it just seems to add a lot of friction to the economy that we definitely don't need at this point. So I think it's positive news, that the House might be, where this bill goes today.
Well, and hopefully it goes the right direction and we lift this off. I've got a wonderful treatise that one of our listeners wrote to Joe at theafternoonconstitutional.com about why he disagrees with me on the idea of stopping this campaign of making the business owners of our country partners in this tax collection, so it looks like Virginia takes lower taxes than it actually does, because you just stick them onto people's receipts at the end of the day. But we'll get into that in a little bit. Tell us about what this whole deal with Jamie Dimon is, and the board of directors.
You and a lot of your listeners probably remember, I want to say it was last summer when J.P. Morgan ended up losing, several $1 billion because of a rogue trader who put on some trades. In fact, the CFO lost her job or resigned ahead of losing her job. And there was a lot of congressional hearings about oversight and how could this happen in this new regulatory environment that we have. And basically what we've seen is, Jamie Dimon is a very smart man. He's been a very good CEO of J.P. Morgan for J.P. Morgan shareholders in many respects. This was one major black eye. But what a lot of investors are starting to push for is saying, we don't like that you oversaw all this. The board of directors that are up for renomination or re-election this year, shareholder groups are saying we're going to vote against these people because they were kind of manning the ship when this loss happened. And they're saying that Jamie Dimon probably should not be CEO and chairman of the board. And this whole issue between CEO and chairman of the board is a long-standing issue in corporate governance. And it goes back and forth. Most often you do see the CEO hold both positions, CEO and chairman of the board. But there does seem to be a growing wave of investor sentiment that these should really be two separate people, and that one individual should not be able to wield that much power over a corporation. And whether any of this passes or whether the shareholders vote to make these changes is unknown. But it is interesting that a reasonably well-respected CEO of a successful bank is facing this kind of outcry from some shareholder groups.
Well, but at the end of the day, isn't it the business of the company? I mean, and my worry in this is, as this goes on more publicly, there's people, especially those who lean further and further to the left, and they were the ones who understood the mime. I think they're ostensibly French in their heart anyway. But the more left one leads, the more the people see this and they start hearing. And I catch wind of rumblings that the government should make laws governing who can be on the board of directors, and making laws that would dictate whether somebody could be the CEO and the chairman of the board. And I don't want that. That's the decision of the individual shareholder of a company, and if they think this person, male, female, alien, it doesn't matter, is right to do both jobs, that's their decision, not something the government should be involved in.
Well, it's a really interesting point, and I 100% agree with everything you're saying, and there is definitely a segment of the population that believes that there's a law for every problem, and that you can fix every problem with a government mandate.
Yes.
And what I think is interesting, and this is where I think, going back to TARP and the bank bailouts and this too big to fail idea, this is where it really starts to bleed in, because my general view is that companies should be able to run themselves how they want to run themselves. Shareholders should elect a board of directors. The board of directors should hire the CEO and other management. And if shareholders are not happy with what's going on, they should sell their shares and go buy stock in another company, right? That's the way a good system should work. But then, when you create this system where government steps in and bails these companies out, instead of, they probably should have let some of these banks fail, or at least equity holders get wiped out, save the depositors or figure out some way to kind of make the situation work. But when you do have the government writing big checks to bail out companies, I think it fuels the fire from people saying that government should have more control over who can hold what role and who can do this and who can do that. And it's almost like the old, an Atlas Shrugged when they decide you're only allowed to own one company, right? And it's kind of crazy when government gets this involved. But I will say some of the banks, and I don't know, the banks didn't necessarily always ask for bailouts. Some of them did, some of them didn't. But that is one of the problems, one of the negative outcomes of having the government have to step in and save some companies.
Right, is all of a sudden you've invited them in, and now they're going to say, okay, well, we're here now. Here's how we roll in Washington, and we all know how well they manage, so many of their industries. Now, tell us about, speaking of the government and banks, there was a story out of MBIA. I've never heard of them, but I've heard of MBNA and the Bank of America, but they merged a long time ago. Who is MBIA, and how are they and the Bank of America dealing with the government?
So these two companies today just agreed to almost $2 billion settlement to, I guess because of some soured mortgages that were written during the boom years. And what's interesting is so MBIA is one of the largest, if not the largest, bond insurance companies. So when there are mortgage-backed securities issued, they will ensure that investors will receive principal and interest, right? So they just work like any other insurance company. But they needed a massive bailout during this crisis because when all these mortgage-backed security bonds started going, to near worthless, they didn't have the capital to actually pay off all the insurance that they had written for these things. So anyway, they got their bailout, and they've continued as a company. But this was just settling. I'm not sure. It's always hard with these things to know who's right and who's wrong. It often to me feels like the government just extracting a fee out of companies without actually doing anything to really change what's going on. So, the SEC or the government extracted almost $2 billion out of these two companies. Now, both stocks did very well today. MBIA actually was up 40%, 45% on this news. And I think a lot of that is just certainty, right? And, we often talk about the value of certainty in the economy. and you see some of these situations and you go, wow, here's a company that had this huge overhang of what was going to happen to them. As soon as the settlement comes out, they're going to write a big check, but it's past them. Certainty, the stock is up, almost 50% in the day.
Well, yeah, I know that's probably the most valuable thing on Wall Street, more so than dollars or a platinum Visa card. But Mark, I appreciate it. What are we looking at coming up this week in terms of stocks and movement in Wall Street? Are we going to set up new shop above 15,000 and stay there, or is this going to be something?
Yeah, we're trying. We're trying. I mean, it's a lower information week than some that we've had over the past month or so. But again, we had the S&P set another all-time high today, and the Dow was flirting with 15,000, but it didn't quite make it there. So we'll see. It'll be an interesting week where there's not a ton of macroeconomic news coming out, but this could be a good test for the market and see how strong this bull sentiment is right now.
Well, I appreciate it. Mark Smith, and you get with him, Mark, M-A-R-C, at redwaveinvestments.com. Ask him questions about yourself. Ask him questions that you'd like to see him address on the air as well. Mark do you keep a Facebook page or anything like that, Mark? Are you too busy, actually working Wall Street to worry about Facebook?
I mostly just work, but so I do not have a Facebook page, although I probably should look into to getting one of those.
You know what? Email works just fine. Mark at redwaveinvestments.com. Have a great afternoon, Mark. Thanks for checking in.
Thanks, Joe. Talk to you tomorrow.